Hi there, I'm Kieran Meakin, Director of Growth at OpenWorks, and I'm here today to talk about open data and first-party data and its use in relending and credit limit management. Now, when our marketing team initially approached me to talk about this subject, we jumped straight into the typical jargon and buzzwords that are often associated with this topic. And after a while, the conversation we were having wasn't sitting right with me. We were missing one crucial piece, the real life implications and experiences of consumers today in the aftermath of COVID-19 from both an in-life and a relending perspective. So I thought I'd bring it to life by telling you about a recent personal experience only last month of how a creditor attempted to make future financial decisions about me based on backward-looking open banking data alone, and then evidence how the use of open data combined with first-party data is set to enhance the market, the way the market assesses affordability. So I think the marketing team have attempted to Photoshop a frustrated look on my profile photo to go with this frustration in this story. So having been impacted myself financially by COVID, it was in conversations. I was in conversation with many creditors over the few months, some of which I was spending hours with over the phone to give an update on my financial situation. And it was interesting to see the different approaches from different creditors, and in particular those that used open banking. And one creditor in particular signposted me to an open banking journey, which was quite a slick process. I completed it quite quickly. They then called me and confidently told me what my disposable income was, and therefore what I was able to pay moving forwards to settle the forbearance period balance that I had accrued. Now, the figure that they had identified my disposable income didn't feel right. However, the creditor was super confident that it must have been, as it was based on open banking data. And we went backwards and forwards. And in the end, I requested that we sort of painstakingly went through each element of the budget they created based on the open banking data to really understand how they had derived at that number. And it turns out that they'd actually, because I'd sought forbearance on my mortgage, that hadn't appeared on my statement, and therefore they had not taken into account, which was a huge oversight. And then additionally, my partner had just been made redundant, and they had continued to include her salary as income going forward. So, as you can imagine, the disposable income number was hugely inflated, and therefore what they were asking me to pay was not aligned to my financial position moving forwards. So without this additional context being given to the creditor, I faced three problems. Firstly, the backward-facing data used to build a picture of my affordability didn't account for my circumstances right now and in the future when I'm actually going to be making the payments. Secondly, I was completely left out of the decision process. So essentially, a decision was made that directly impacted me based on my data without verifying those details or giving me the opportunity to say, yes, this is my budget, and for me to own that. And then lastly, I had not understood, if I had not understood open banking to the level that I do, I may not have known how to challenge the logic that they had used. And I can imagine I'm not the only one to have faced this over the last 6 months and in months and possibly years to come. Both businesses and consumers are facing unprecedented impacts off the back of the COVID pandemic. And what was once the sort of average demographic primed for lending, relending, cross-selling is no longer as easy to identify. What a consumer could comfortably afford 6 months ago may not be affordable today. So here's the challenge. How can we ensure that every customer gets an affordable product based on their personal circumstances and the support that they may need in life should those circumstances change in such a changing and volatile world? Now, digital affordability is here. Consumers and their creditors are using it. But are we doing enough? Can we do more to understand our customers' affordability throughout the entire life cycle of their relationship with their creditors? To build an affordability, the market relies on CRA data, credit reference data, current account turnover data, and open banking data to automate affordability and evidence fair customer treatment. And we often refer to this as open data. But this information doesn't paint the full picture of a consumer and their circumstances. It's missing contextual information about the individual's life, which could impact affordability. And we call that first-party data. First-party data is defined as information that has been collected and verified from your customers. And as an example, and to put this into context, open data alone won't tell you that a customer has received a pay rise last week. It won't tell you that a customer had a baby last month, and it won't tell you that a customer is suffering from a debilitating illness, which will impact their work and income in months to come. But first-party data does. So how can we combine first-party data with open data to make responsible re-lending and in-life decisions? And to provide a bit more context to this question, with the ongoing FCA investigation into unsecured lending, new regulations are likely on the horizon, and we're likely to see more stringent outlines regarding affordability assessment, and just as importantly, how they're evidenced. Customers clearly sit at the heart of every lending and credit decision, but for most part, they're left out of the decision process and often don't know their own financial situation themselves. So to truly make a fair assessment, the customer needs to be aware of their financial situation and given the opportunity to provide context to their circumstances. And this is where open data combined with first party data comes into play. Now, as humans, we exhibit a number of behaviors that influence our outlook on our personal finances. The first one is the round number bias. We're more likely to use round numbers when guessing or estimating. So your mortgage is, say, £1,080, and if asked, you might say it's around £1,000, and already you've just given yourself £80 additional disposable income. Then we have the forgotten curve. And as humans, we focus on understanding the world and not remembering it. And this is true with our spending, and even more so now with contactless spending. We simply are unaware of how much we actually spend every day. And then we have the response bias. We often just tell people what they want to hear as we're afraid of being judged. So when on the phone to an agent, people often flex the truth about their situation. And then finally, the attention span. The average Brit has an attention span of just 10 minutes for finance-related topics. So spending an hour on the phone going through their finances with a fine-tooth comb simply loses them and results in an inaccurate budget. Now, all of these pitfalls are a result of our own behaviour and bias, but they can be removed through the use of digital affordability, and combining both open data with first-party data. And with this type of digital affordability journey, actual transaction and debt amounts are sourced from open banking and CRA data, so bills or payments can't be forgotten, and we can't hide away from the truth of our actual income and spending. And then by providing customers in a digital journey with accurate information on how much they have coming in and going out each month, and then asking them to layer on top of that the context of first-party data, you can then empower them to confidently borrow a product that they can afford to manage and afford throughout the entire customer lifecycle. So while open banking data provides your business with a view to build an affordability model, it leaves out the everyday changes people face in their lives. So if a customer recently had a 6-month payment holiday on their mortgage, with open banking data algorithms alone, then you would just view that person as not having a mortgage or rent, and therefore with a higher disposable income. And for those who have just secured a new job after 6 months on reduced furlough pay, open banking data wouldn't account for their current and future income, so would underestimate their affordability. So by combining both accurate insights from open data with first-party data supplied by your customer, you're able to build the most accurate view of your customer's affordability to prove fair customer treatment with every lending, relending, and restructuring decision. So I'll leave you with this. Responsible lenders equals confident borrowers. And by empowering the consumers to build their own budget, we can make accurate in-life decisions that are clearly evidenced, and we need to work together as a market to help everyone understand exactly what they can afford. Thank you.